Welcome back to the Behind the Well show. Your host, Roger Abel. I've got Elias Randall with me. Headed into the Christmas season. Activities are ramping up.
Christmas activities.
Yeah. I don't know when this one's going to film, but we're getting pretty darn close.
When is this one going to air?
We'd have to ask Molly. I'm guessing probably the
right there.
Week before Christmas, Molly? Next week. Okay. So I'm going to be somewhere nice and sunny, also known as the Mickey Mouse Cruise, Disney cruise next week. So, I'm going to get the shakedown from Mickey Mouse. He's going to run off my credit card, as Jonas would say.
Sounds expensive.
I think the cool thing about the cruise, all the food's included. Like, unless you go to like some of the fancier restaurants, which with the kids, they don't eat that stuff. We're going with another couple. Should be a lot of fun.
Yeah, if you have your kids with you, you might as well only go to places that have chicken strips and mac and cheese and French fries and hamburgers. I'm sure all those things are in the
Buffet.
You already paid.
I already paid.
Price.
This is actually way less expensive than going to Disney for 6 days.
The cruise is?
Oh, yeah, way less. It's primarily, I don't think two things when you actually go to Disney. The lodging is about the same cost. Like the room we would get on a Disney resort is about the same cost as the cruise. But on the cruise, you're not buying the park passes and you're not buying food. So it's going to be less, significantly less, because food at Disney's expensive.
Yeah. It's fairly decent, though, for theme park food.
Pretty good. There's some good, what's really good, and I can't believe I'm going to say this, the Rainforest Cafe at Animal Kingdom is really good.
Really?
If you go to the Rainforest Cafe.
Said that either.
If you go to the Rainforest Cafe in Minneapolis, not so hot.
Not good. I've never been to. I've probably been to the one at Disney. I'm sure I have, but
we went to the one we go to Minneapolis for spring break every year, and stay at the Great Wolf Lodge, and then go over to Mall of America because they have the indoor amusement park. So we ate at Rainforest Cafe, and I told my wife, like, this is horrible. So when she booked a reservation at Disney last year at this time, I'm like, I don't know, man. But it was actually pretty darn good. Or I was just really, really hungry.
Probably both.
Both. Hey.
So my football season just wrapped up. You haven't asked me about football on the show, and you've been asking me all fall.
All right. How did it end?
That's my way.
How was your review?
That's my way of saying I want the listeners to know my football season is over.
Okay, how did
our
football
college
end?
crew worked an NCAA Division III playoff game, and after that game, the next day got absolutely annihilated in our evaluation of how we work the game. So, and what that means for an official is we did not grade out very well on the playoff game that we worked. So,
well, it's funny. You told me that, and I called you. I think we were talking on Monday about the Commanders game. I go, well, you guys didn't grade out good, but I'm pretty sure these NFL referees didn't grade out very good in the Commanders game.
Yeah, I heard there was a couple weird situations.
3 botched calls in the last 7 minutes and 1 in overtime.
Yeah, unfortunately, here's the unfortunate thing for us is a lot of times when you're working the game, you kind of know if things are going sideways and maybe someone missed a big call or something. And I'll be honest, there's a couple things in our evaluation that I agree with that we do need to get better at. I think what kind of chopped us down is we felt in general we did a good job managing the game, called the big fouls in the game. Our evaluator did not agree, so we got recorded as having 7 missed calls in one game.
The people on the sideline are going, are these refs blind?
Actually, everyone, I think if you were to ask the coaches, I think the coaches felt the game was managed very well. So these 7 missed calls that we were graded on, there was, to say it's a miss is, you might say it's an incorrect judgment if you disagree for the reasons it was not called. But to call it a miss is pretty harsh in officiating because it was all action that was officiated. There was a ruling made on it. And whether it was due to feeling it was marginal or time and score of the game, all reasons we felt were good to pass were recorded as miss. So that's brutal. And when you're an official, you can't have a game with, and they're not all on me. I had one missed call in the game, so I'll eat that one. But it is what it is.
You're allowed one mistake a year, Eli. That's kind of my motto. You're allowed one a year.
I made more than one in that game, I promise you. I haven't seen the film, but I'm sure there's several things if I watched it that I felt like I should have done differently. Whether it's position, probably not judgment-wise, but maybe just decisions and what to officiate at certain times in the game. So no one's perfect.
No,
But it was funny that, because the ride home, dude, we were so amped. Oh, man, we did so good. We're probably going to get another playoff game. 24 hours later, we get this email. You're done.
All right.
So anyway, we can move on.
So if one of my college friends listen to this, they're going to appreciate this. That same thing happened to me in a college class that I had at Iowa. So I was in the statistics class, and it was like the first midterm exam or whatever, right? I go in, 37 minutes later, I'm out of there. I'm like, dude, I aced it. And my buddy Mark was in that class. He's like, to be like an hour and a half. You were done in 37 minutes. I did easy. I get my score back.
I was doing them all wrong.
Dude, it's like 58%. I'm like, oh my God, what'd I do? But it's just sometimes you have like that massive overconfidence because like, yeah, that was easy. You're like, what happened?
That's pretty good analogy. That's kind of what happened to us. We felt very good and then just ran into a buzzsaw. That can happen.
I know. Well, hey, so question, are you saving your pennies?
Can I spend them anymore?
I don't know. I mean, has anybody spent? I can't remember the last time I dropped a penny somewhere. In fact, when I get it back, I'm like, it's kind of a nuisance. And most people, I think, put them into the penny jar.
I think most of my pennies have gone into the take a penny, leave a penny jar.
Yeah. So the reason we bring it up, the end of the penny is near. It's over. We're not producing pennies anymore. I don't remember what it said it cost, but I want to say it costs like 3 cents or 5 cents to actually make a penny. So what kind of, it doesn't really make any sense to keep producing them, right? Pay more than it's worth.
I'm sure it's been more expensive to make a penny than what it's worth for a long time.
Is that the leading to really everybody uses dollars in digital currency now, right?
Right.
If you look at how most people spend money, very rarely do I see anybody stripping out cash anywhere. And I used to carry cash all the time. I can't remember the last time I stripped out cash for anything other than like paying a babysitter. You know what I mean? Like something that cash needs to be exchanged where I can't remember the last time I bought something with cash that I was going to get changed for the product.
That's part of the reason that we can't have pennies anymore because no one uses cash.
Nickels are next.
No one uses cash, so we can't have pennies. To me, it doesn't even matter. I thought it was funny when I heard about it. I read a little bit about it. I knew it was more expensive to make a penny than it's worth, but it doesn't change anything. Is there going to be any money? Yeah, the production costs will be saved, so that's a good thing.
Here's what's really interesting. If you think back 100 years ago, a penny actually had some real value. Like, you could buy stuff with a penny. Today, there's really, inflation has eroded it so much that there is zero value in a penny.
You know what? I'm going to look up. When was the last time you could get a cheeseburger for a nickel?
Okay, I'm going to guess. I'm going to say 1945.
By the late 1940s.
I said 45.
You could last buy a cheeseburger for a nickel in the early to mid 1900s, likely ceasing to be common by the late 40s. So in the 30s and
White Castle in 1921 had a 5-cent burger. 10 cents in the 30s, they doubled the price.
So in the 20s, if you had 5 pennies in your pocket, you could go buy a cheeseburger.
Right.
Dude.
That's what I'm saying. 5 pennies,
That'd be dangerous.
I don't even know what you.
What?
He could Marty McFly back and time machine.
Give me
time
20
machine,
cheeseburgers. I'll give you $1. Wow.
But I think the does go for the listeners. Just show, hey, that's what inflation does to things. You think about it. You used to be able to buy a cheeseburger for a nickel. That same cheeseburger today, one, it's smaller, as you always talk about shrinkflation.
Oh, I'm
Two,
sure.
a lot of times I'm not sure it's real meat, and all the ingredients are cheapened down. Like, I'm guessing when you got a cheeseburger in 1925 for a nickel, it was like a $13 cheeseburger today, not a $3 value meal cheeseburger.
I would assume.
I mean, I don't even think they were making them like that back then.
Yeah, I think the food was more real in general back then.
I have a reflection. We talked on a show about a year ago about market expectations and what we kind of thought you could expect from a market. And we were looking at two data points. And I don't know if you remember this, but we were looking at the Fed had cut 0.5% in October. And then how many times, what's the average return when you have two back-to-back 20% years? What's on average in the third year?
And then with the rate cut, or
Well, just independently, not together, just independently, those two data points.
I think when you have 20 years, there's pretty good odds you're gonna have another.
It's actually more likely to have a mid-single digit. That's the average.
Really? Okay.
Mid-single digits. But the 50 basis point rate cut, if you remember, I was a little nervous about. And we don't predict markets. We didn't get people out of the market. That's not what we do. We get to talk about. There was only two times they kicked off. The last two times they kicked off the 50-point rate cut, or three times, was 2000, tech crash, 08, housing bubble, and COVID. And I kind of raised the alarm bell like, hey, look, this might be something we don't know about. It turned out to be nothing. In the market, a year after a 50-point rate cut to start an easing cycle, it's almost a coin flip of whether the market's up or down.
I do remember that. It was about 50-50,
So-
whether it's positive or negative. But here,
We've
some of the
blown
reasons-
through that stuff. I mean, we're likely going to have a double-digit up year, depending upon what happens here the last couple of weeks. We definitely had a positive year over year. And it hasn't come without volatility. You could have found a lot of reasons this year, either to get out of the market or to not be invested.
well, the max pullback this year was 18.9%.
Do you know what the max intraday was?
I do not.
19.8.
Oh, I did know that because I know we got close to closing, but never closed in bear market
They
territory.
had the compound right after that happened. They talked a little bit about how close we've come to actual bear markets, and it's almost like it's a little bit of a resistance point. But 19.8, so we were within, really close to being in a bear market, and rapidly brought it back.
I think at the beginning of the year, people didn't know. Here's the things people didn't know. How resilient would the economy be? How resilient would consumers be? And those two things have proven to have a lot of resilience this year, where if the economy was slowing down more and people were stopping, the consumer was weakening, then I'm sure we would have a different result this year. But those two things remain strong.
I did just see this year is the most layoffs since 2020. So the job market is definitely weakening.
It is.
Now, how many of those are government jobs that got cut? I don't know. One thing I think is, well, I have a question for you. Why do you think people, I'm looking at S&P performance since 1950. If somebody looked at this and really studied it, spent a small amount of time looking at it, why do you think people are so scared of the stock market?
Because I think people are scared. It's just easier to be scared. And when things go bad, when the market's volatile and investors' accounts are fluctuating down, it does a couple things. One, it makes people feel less wealthy, so then they're more reluctant to spend money. There are people that in April, there were plenty of people saying this is going to get worse before it gets better, and then it didn't happen. And humans in general are designed for survival. So of course you always think it's going to get worse before it gets better. That's the way we're wired to think.
So I'm going to arm the people listening with some statistics. So over the last 75 years, the market has only finished down 25% or greater 2 times. 1974, which I don't know what the event in 1974 was, and then 2008. So great kickoff to the great financial crisis, right? Only 3 times in 75 years was it down between 15 and 25%. 22, that was the most rapid increase in interest rates we've ever seen as a percentage basis. So rampant inflation. 2002 and 1973. So 5 times in 75 years has the market finished down more than 15%. I think if you arm people with that information, you might be able to start to change their view of the risk of the stock market. Now, conversely, how many years, I don't know if you've counted, so I'm quizzing you, how many years in the last 75 years has the market finished up more than 25%?
I can tell you because I did not count, but I can right now. 16 years.
16 years.
16. So 14 years between 15 and 25.
That's so 30 years.
And 19 years plus 5 to plus 15.
So 30 years so arguably 40% of the time, the market does more than 25%.
Well, in the vast majority of the time, it's between -5 and 25 or more.
I mean, it's massively distributed towards higher returns. And what's ironic is, what's the average of the market over the last 75 years? Probably around 10 or 11% would be my guess. And that's where it spends most of its time. But 30% of the time, it's up greater than 15%.
That's nice to
40%
know.
of the time. I think people should be armed with that, and they'd probably change their look on how they look at risk.
Here's the issue, though. That year, so, okay, you get into a year where it's, well, a year with 25 or more, even down 25 to down 15. That year is hard on people. A year is a long time to go with negative returns. Now, in the big picture of your life, it's not. It really, for an investor, should be a blip on the radar. Especially when you look at these charts and you have all this other information to arm you to make good decisions. But when you're in the middle of it, and if you have any amount of money, it's going to be painful.
This just goes to show people need to stop predicting. I had an individual I met with yesterday. He's in his 70s, early 70s. I've known the family for 35 years. And he goes, I think it's just time I finally have somebody help me. I go, what's going on? He goes, well, in 2020, I was just convinced.
In his 70s?
73, yeah. And hey, they're not bad shape. They're not bad shape. They have great Social Security checks. They have a little bit saved. But
better late than never.
In 2020, I thought for sure the market was going to go down because Biden was president. So he put all of his stuff into fixed products at, the worst possible interest rates ever. Like interest rates were 0.
And just gotten crushed since then.
Yeah. He hasn't lost anything.
Yeah,
but
he hasn't lost
made
any money,
anything.
but the market's way outperformed.
People that are trying. So here was my question I was going to pose to you, Elias. I have an opinion. We always think people are getting out of the market because they're scared. Do you think more people get out of the market because they're scared, or because they're greedy and they think they can buy it at a lower price. And I don't think as advisors or our group in general, we talk about that. I think there's more people that jump out of the market because they see the market going down like, man, I can buy more at a lower price. I heard more of that this year than I need to get out of the market because I don't know what's going to happen. COVID was different. But this year, I think I should get out. It's going to go down another 10% and then I'll buy back lower. I've heard that multiple times.
It's a good point. It could be more market timing. I don't know that I have a good perspective on that. Really, it happens for both. I think a lot of I don't know. What do you think? You think it's more people that think that they can time the market?
Yeah, I do. I don't think it was that way 20 years ago.
I just have a hard time believing there's people out there that, which I know it's true, but when people say stuff like that, it's hard for me to understand how you would believe that you could time the market.
My wife said something about it the other day. She said, well, the market's high. Maybe we should sell some, wait for it to go down. The normal person doesn't have the information that we have. I'm just thinking back to all the phone calls I had this year. And it's not a lot, but we had nervous people in October or April. If an advisor tells you none of their clients were nervous in April, they didn't talk to any of them. Right? Their phone was shut off. But I think of the individuals that I spoke with. I had one family that was nervous in February because of the change in leadership in the country. We'll put it that way. And they didn't want to be in the stock market because of their political belief. Outside of that, all the other calls I got, they weren't, oh my gosh, I need to get out. I can't take the pain. It was literally, I think it's going to go another 10% lower. I had someone when the market was down 17% tell me, I think we should sell it all and buy back in when it goes down another 10. I go, how do you know it's going down another 10? I just know.
If you were watching,
guess what? It didn't. And it came back.
If you were watching CNBC back then in those shows and there were plenty of calls for the market to get worse back in April. Yep, this isn't over. We're going to have another leg down. So I see why people were thinking that, but when you reflect on this year and just the economic data, it kind of makes sense what has happened. I don't think what's going on is hard to really fathom or understand. And what was that? The April pullback. What was it about? Well, there was a change in administration, and then we had all this uncertainty with tariffs. Outside of that, everything else was going pretty good. And there's enough, especially younger investors, that want to dip buy and get into the market. So I don't know. I've read a bunch of stuff recently about market timing, and
doesn't work.
Yeah, it just doesn't work. And there was an article about like day-to-day pullbacks and people trying to like tick the top as a trader just consistently throughout this year. And like these day-to-day pullbacks are 1.1%. And then there was like one day where you could have got a 4.2% discount. Now I'm not factoring in the maximum drawdown because had you gotten out before April and then bought back in after we were down 15 or maybe even back up a little bit, maybe there were some people who got lucky and timed this one pretty good.
The way to time it is to buy the dips.
That's what I do.
I don't sell. I can't figure out when to get out. Like you tell me when to get out, I don't know. But if I buy when the market's down a little bit over time, it's probably going higher. So it's why I dollar cost average every week. And it's actually 3 times a week now. I dollar cost average 3 times a week, 3 different accounts.
Good. That's good.
But I'm basically buying every day's price other than 2 days. And I probably could do a daily ACH and do it. And I'm not trying to dip buy.
You certainly could.
I'm spreading around and I buy certain investments in certain accounts. And every week I'm putting 3 times a week, I'm putting dough in. So I had a question from the same customer who came in yesterday, asking, he goes, I've seen this ad on Facebook. And instantly I'm like, okay, I don't know if you've seen it, but it's in my scroll a lot. Why would you own the S&P 500 when you could own the 10 best companies and the 10 that are moving the market and be in cash when the market's going down? So it's like a market timing type fund.
What's the performance on it?
I didn't even look. I didn't give them a click. But I told my client, I said, the fact that they just told me they're trying to go to cash when the market goes down tells me it's going to massively underperform. Those were called tactical funds, and the tactical investment category got crushed the last 10 to 12 years.
And they should have had plenty of opportunity to be tactical.
Yeah. Well, what did they do? They created this fund. They did a back test and said, if we would have done this when this happened, this is what your returns would have been. Well, sure, anybody can create a back-tested mathematical model and say it'll work in the future, and we know it won't probably. I mean, every prospectus says past performance is not indicative of future results, especially if it's been back-tested.
Can you give me the forward test, the forward test crystal ball trading strategy?
All right, last thing we're going to cover here. I'll tee it up this way. Do you know anybody, Elias, that is really frugal? And I'm sure the answer is yes, I do.
I know a handful of people. Yes.
And there are things that when they do it, I'm like, well, you think that's frugal. I think you spent more money than you saved.
So a good friend of mine coined this term several years ago, but he said there are some people that will spend a nickel to save a penny.
Yeah.
That's what these are frugal. These are just
going to
cheap.
Be fun. Yeah.
Yeah. These are just cheap habits.
So
like number one, driving far out of your way to save a few cents on gas.
Who does that? Well, I know someone who does that.
I do. My grandfather used to do that.
I don't even know what the price of gas is.
He would drive across town in the town he lived in. I think it was Sam's, probably Sam's, because back then I don't even think Costco was around, because Sam's Club always had the cheapest gas. So then one time I asked him, you just drive there to get gas? And it's like 15 or 20 miles away. Now, I could understand how you would maybe look at your schedule for the week, and if you're going to grocery shop at Sam's, I got a half a tank, I'm going to Sam's tomorrow, I'm going to fill up there because the gas is a better price, I'm going there anyway. But he would just make trips out of his way to go fill up with gas to save 5 cents a gallon. I mean, how many gallon tank you filling up? Is it a 2,000 gallon tank?
No, I don't even know the price.
It's a 16-gallon tank or whatever's on a vehicle.
Someone will tell me how gas is this price here. I'm like, who's looking at gas prices? You got to have it. And now we just proved that a penny's not worth anything because we're going to stop making it. So if it's 2 cents more somewhere, is there a great impact to your life? The answer is no. All right, number 2 on our list, driving to multiple stores in a single trip to find a deal. I actually am going to disagree with this, and I'm going to give you a real life example.
Do it.
I don't do it. I go to multiple stores not because of the price, but I go to multiple stores because of what they carry. I grew up. My parents grew up doing this. You go to Target, the Fairway, maybe Kmart, whatever it was, based upon the deal that was there. In today's world, and my wife noticed this, and she doesn't even grocery shop. There's one place in this town that people think is a bargain to shop at for groceries, but they have the most expensive milk by double the cost. Well, if I was really on a budget, I would be going to multiple stores once I know how much those items are at those stores to save money. Because if you say you have 4 kids, how many gallons of milk are you going through each week?
2.
Okay, so there's most of the places in town, you can get a gallon of milk for $2.85. At the place that's considered a bargain in this town where a lot of people shop, it's $5.
For a gallon of milk.
It's $2 more.
Wow.
And you wouldn't think it, but my wife's like, I never buy milk there. So she'll go to 2 places. I think you can save money going to multiple different stops, but here's what I wouldn't be doing. Driving 27 miles across town.
And here's what I would like to know, and I didn't see it in here, but the person that wrote this, Rachel Green is her name. Where we live, it's probably more possible to make a couple stops because we don't live in a huge metropolitan area. But I'm sure there are cities, like if she lives in a city and to go 5 miles, it takes you 40 minutes and stuff like that. So this could be different just depending on region and where you live as well.
I think that's a really good point. If you're in a big city, your time is worth something. You know, we live in a town of 200,000 people. It's not a big city and it's easy to get around. In fact, do you know how many times I've ran into Jonas at the grocery store? And we do the same route. We go to New Pioneer Co-op, and then I go to Hy-Vee because it's on the way home. I run into a New Pioneer Co-op, and then I run into him at Hy-Vee. Because there's certain items that each store has that our family wants. 3, buying everything in bulk. You know, yep, the price is lower, but do you need a year's supply of vegetable broth? And I'll give you a great example. We went to Costco. My wife, like, hey, I'm going to make some soup. So we bought bulk vegetable broth. We did this 6 months ago. Guess how many we've used? 1. They're all going to expire. So we get probably.
Why did you buy it in bulk?
That's what Megan wanted to buy at Costco. She wanted to make
soup
soup
season. It's fall. It's crock pot
season.
Soup
I get in so
season.
much trouble for buying bulk, mostly because it takes up all kinds of space. And for the most part, you don't need this much stuff.
Typically not.
4, hand washing dishes rather than running the dishwasher. I don't know anybody who does this.
I've never even heard of that as being a way to be frugal.
I guess if you don't buy a dishwasher, I don't know anybody who doesn't have a dishwasher. Here's the best one on the list, Elias. You ready?
Mm-hmm.
Do-it-yourself repairs. That should be done by a pro. And I would say
just ask YouTube. It's easy.
Well,
that door you need replaced, that trim that could look better, the bathroom that you could remodel, just ask YouTube. It's easy. Anyone can do it.
No, but how many times, well, at least for me, if I'm like, I'm going to do that and I didn't do it many times. I don't really like to fix stuff. Start a project and do it. It takes me way more time, costs me all kinds of money to do it. I'm like, it would have been cheaper to just hire somebody.
Most projects are cheaper.
Because they have the tools, they have the knowledge, they're going to do it right once. They're not going to have to go back to the store 14 different times and get different stuff.
That's here's the big separator. Do you have the knowledge and the tools to do it? Like I have a good friend of mine, they scratch up concrete and then paint it it's a polyurea product. So, and I know roughly what they charge for a garage square foot price. Well, then another.
What is it, $7?
Probably. Yes. 6, 7, somewhere in there, $7. $7. $7 or $8. Another friend of mine was considering asking them to do his garage and then saying to me, well, I might be able to save some money if I do it myself. So I entertained it a little bit, but I ended up telling him, dude, by the time you rent the equipment that they're going to use to do this correctly, you are not going to save any money and you're going to spend all the time doing it. That's why they can charge what they charge, because they already own all of the equipment and they know the steps in the process to do it right. And that's almost every single project out there. Even just to paint, what's it going to cost you to go buy all the equipment? Now, and I think you've mentioned this before, there's a difference between painting a wall and painting a wall correctly. And I don't know that everyone understands that. But hey, if you just want it painted, yeah, go ahead. Go get a bucket of paint and a paintbrush and slap the paint on there and paint it. It's done. Does it look nice? Is it done correctly? That's a whole different question.
For sure.
So
some of the things you think are a bargain, probably aren't a bargain, probably not worth your time to go do. I think the biggest one on that list, if you're going to do a project and you've never done it, and if you have to buy tools or anything you don't need, you probably should just hire someone. You will be money ahead.
I agree with that.
With that said, thank everybody for listening. Congratulations on a successful football season, Elias, although your end of the year maybe didn't end how you wanted. That happens sometimes.
That's life. That's certainly life, and that's football too, so it is what it is.
Yeah, we want to thank everybody for listening. Hope you tune in next week.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments and Wealth Management and LPL Financial do not provide tax advice. Please consult your tax professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. There's no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs, and does not assure a profit or protect against loss. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs, and does not assure a profit or protect against loss. Dollar cost averaging involves continuous investment in securities regardless of fluctuations in price levels. Investors should consider their ability to continue purchasing through periods of low price levels. Such a plan does not assure a profit and does not protect against loss in declining markets. A plan participant leaving an employer typically has 4 options and may engage in a combination of these options, each choice offering advantages and disadvantages. Those options include leave the money in their former employer's plan if permitted, roll over the assets to their new employer's plan if one is available and rollovers are permitted, roll over to an IRA, or cash out the account value. Consult your tax professional about eligibility to Roth and traditional IRA contributions. Contributions and earnings in a Roth IRA can be withdrawn without paying taxes and penalties if the account owner is at least 59.5 and has held their Roth IRA for at least 5 years. Traditional IRA account owners have considerations to make before performing a Roth IRA conversion. These primarily include income tax consequences on the converted amount in the year of the conversion, withdrawal limitations from a Roth IRA, and income limitations for future contributions to a Roth IRA. In addition, if you are required to take a minimum distribution, RMD, in the year you convert, you must do so before converting to a Roth IRA.